Welcome to Allan Berry Reports TV. I'm Allan Berry Labocan, the host of the show. I'm from allanberryreports.com. Today we have a new installment of our Week in Review segment. During this show, we talk about some of the trends we're seeing in the US dollar, as well as some of the commodities we follow closely, such as gold, silver, oil, copper, uranium, and diamonds. We're getting some good indications for the economy and where things are going based on those trends. So we're going to talk about that today. Before we get started, we always like to start out with our thank yous. We use youtube.com and ustream.tv to broadcast and produce these shows, and so they're really great websites that are useful for anybody that is interested in doing online shows. So we highly recommend those two websites. In addition, if you're watching this show on our website at allanberryreports.com, you'll notice to the left and to the right of me that there's banners on the website, and those banner sponsors are really instrumental in us being able to do the show and bring it to you. So if you want to do any homework on those companies, just click on the banner. That'll take you to their website where you can do some of that homework on those companies. And then, of course, you, the viewers, got to say thank you. If you didn't tune in, we wouldn't have a reason to do this show, and we really appreciate that. So thank you very much for tuning in. And so we'll get right to it. It's definitely been an eventful week this week. Right now, the G20 meetings have happened, and there's been some dust-ups. I think the U.S. dollar trading activity and other currencies were high on the agenda. Spilling out from those meetings, there was an article by former Federal Reserve Chairman Greenspan talking about the recent actions that seem to be focused on devaluing the U.S. dollar. And then we had rebuttals from current Treasury Secretary Tim Geithner, and President Obama echoed those comments. And basically what they said is we would never be in the business of purposely devaluing the currency. And it's whether you express that as your goal or your actions lead to it, I think is really not that relevant. What's most important is not what's coming out of your mouth, but what the actions are. And when you're running trillion-dollar deficits on an annual basis, and this is rapidly growing the national debt of the country, and you're printing dollars to try to stimulate the economy and basically oversupplying the globe with U.S. dollars. These are things that will have led and will continue to lead to weakness in the U.S. dollar. And so recent actions by the Federal Reserve, I believe, definitely are going to result in devaluing the currency. I don't think it's going to make much of a difference on the U.S. growth, economic growth. I definitely think it will have success in devaluing the currency. And so, over the years, I've been following the market closely for 20 years, and during much of those years, former Federal Reserve Chairman Greenspan was in power, and many times I've disagreed with his views. I think that in a lot of ways, what happened was caused by their actions in the Fed prior to Chairman Bernanke getting in. But nonetheless, one of those big things that I've had is I always felt that Chairman Greenspan was not very good at predicting the markets. Oftentimes he was a great contrary indicator. But the biggest fundamental argument I've had over the years was his view towards always fighting this boogeyman in the closet of inflation. He came into power on the heels of the success that Chairman Volcker had in fighting off inflation, and he kept on fighting inflation, even though the globe was, we were gaining a global economy, and the products from where you could see them from produced cheaper in other countries was kind of importing a lack of inflation. And so fighting that boogeyman in the closet all that time, I think, led to some of the results that we've seen. But nonetheless, I think Chairman Greenspan was right on the money in his recent comments about the recent actions resulting in devaluing the U.S. dollar, and I disagree with where Chairman or Treasury Secretary Geithner and President Obama, their comments regarding what they think about the U.S. dollar. And so I definitely think that the U.S. dollar is being devalued by some of these actions, and I think it will continue. It's going to have some upward swings in a downward market. Counter trend moves always happen, but fundamentally I think the U.S. dollar has more downward pressure. And so now we'll get into talking about commodities, and that it's a really good precursor because commodities are quoted and traded in U.S. dollars, and so what happens with the U.S. dollar has a big impact on commodities. And so the first two we're going to talk about, we always talk about gold and silver generally together because not only do they have similar fundamentals based on supply, they also have similar fundamentals based on demand. Now, silver has more industrial usages, but nonetheless, they seem to track a similar path. And so what we're seeing in the gold market and with silver is that they've hit a peak, and then they came off of that peak with some profit taking. That's been about 5% pullback, a little more in silver. That's always the case. Silver tends to follow the same path as gold, but outperform on the upside and outperform on the downside. And so, the move in gold after peaking at about 1440 or somewhere in there, it's come back about 5%. During a long-term bull market, which is what we think we're in, we have been in for the last 10 years when it comes to gold, and we think we're in for a number of years ahead of a bull market. We would expect in a strong bull market that there is going to be profit taking, that those profit taking periods are generally not that severe and are over pretty quickly, and that's what we see with gold. Where it sort of catches its bottom after it peaked and comes back, I think it's going to get support somewhere around 1350 to 1370, right around where it is right now. And so then I think it can start to move in the positive direction again, and silver is going to follow a similar path. So the last few days, this week we've seen that peak, and we're seeing the sell-off and some profit taking. And so I think we're going to get back on track with that bull trend fairly rapidly with gold and silver. Next, we're going to move into uranium. Uranium is, in our view, one of the most important sources of energy going into the future. You look at several different countries are moving right. That's going to be a primary source of their energy production, or a major source. And currently, and for a number of years, there has been a significant deficit between the supply and the demand. And what's been filling that deficit is the decommissioning of nuclear weapons. That source is finite. We don't think it has a lot of years left in it. Meanwhile, as that gap between supply and demand, we think will only grow because mine production is fairly flat, and demand growth is very rapid. There's many nuclear reactors in development, and so We think that that gap is only going to grow. This is very bullish for uranium prices. We've seen them hit the peak of over $140. Earlier this year, it hit the low 40s. It's now bounced off that. It's now trading in the high 50s. So we think that the trend is going back into a bullish scenario. Diamonds are another commodity we follow very closely. And one of the key reasons that we follow it so closely is it's a really good indicator of what's happening in sort of the upper end of the economic food chain, if you will. And diamond prices got battered down quite badly in 2008 when we had all the economic turmoil, and since then they've been coming back quite aggressively. And one of the key reasons for that is the China and India are quickly becoming major consumers of those, and so added on to the demand from the developed economies, and then you get these new emerging markets that are rapidly growing their middle class, and that's exactly what we see is happening based on what we're seeing in the diamond market. Is the middle class of China and India are growing quite significantly, and now they're starting to consume a lot of diamonds, and so we feel that will continue to be very supportive for higher prices of diamonds. Now we'll move into oil and copper. These are our key global economic indicators, if you will. And what they've been saying to us for quite a while now is that the global economic growth or recovery is in pretty sound shape. We're also now, the emerging economies are doing quite well. They've recovered quite rapidly, and now I'm starting to see some signs, and some better signs for the U.S. economy as well. It's been in recovery, but the recovery has been pretty mild, especially when you consider how rapidly it came down. And so you're coming from a lower base, and it hasn't been that rapid of a recovery. But we're seeing some good signs in the trend of the employment numbers. And also the consumer confidence seems to be getting better as well. And, there's several reasons for this. I'm glad the elections are out of the way. Now we don't have to listen to politicians as much, creating so much fear and that results in a lack of consumer confidence. I don't really think these recent moves by Bernanke and the Fed are really having any influence whatsoever. I think they're basically a waste of a lot of money. But we are seeing some signs that things are starting to get better in the U.S. economy. And if you start adding those two together, the global emerging economy growth, and then the developed economy of the United States, the lead economy of the world economy, and we think that that's why oil and copper are doing so well. And ultimately, we're big believers that the best way to buy commodities is the commodities in the ground, and the resource companies. If you're able to pick high quality resource companies, that you'll get better returns in high quality resource companies than you will in the commodities. So we're bullish on commodity prices, but we're even more bullish on high quality resource stocks. So that's a wrap on our show today. Before closing, we'd like to stress that this show and our reports are for information purposes only. We aren't making buying or selling recommendations, and it's important for you to do your own homework and research before making any investment decisions. We're always trying to grow our audience, and any efforts you can make to get the word out about our reports and our website, we'd really appreciate that. We also really appreciate you taking the time to watch the shows. We know everybody is very busy these days, and we appreciate you tuning in. Our next show we'll have out next week will be another In the News show, and we'll be talking about recent developments from some of the resource stocks. You want to find out about our shows, subscribe to our email newsletter. We hope you can join us for future shows. All of our work is on our website at allanberryreports.com. Have a great day, and thanks a lot for tuning in.